Hello, I'm Nimrata,
And I'm Chris.
and we're
NJ Properties.
and welcome to episode 1 of our podcast. Today we're going to be talking about everyone's favorite topic right now, interest rates. Chris, do you know what the interest rates are sitting at today?
Yes, because after our recent take, you told me it was 6.55%.
He would be correct slightly. It's actually sitting around 6.66%.
Oh, dang.
Can you talk a little bit about how that compares to when you bought your first home during the Jurassic period?
Oh, actually, it was the dot-com boom in the 90s, 1999 to be exact. And I purchased a condo in downtown for $129,000 at 6.25%.
So just to kind of put that into perspective for people, interest rates are hovering around the same percentage, whereas home prices have gone up 3 times as much since then. So your money is going a long way, technically. Okay, now let's talk about something that people don't really think about. What are all of the things in our life that carries interest?
Your car loan, your credit cards, rent.
I told him that one. And the reason that I say that is because at for rent, you are just paying that and you're never going to own it, right? So in my mind, that's 100% interest. And most credit cards are sitting between 20 and 30% for their annual interest rate fees. Cars right now, super high, like anywhere from 12 to 20%. Can you talk to me a little bit about why people are okay with having such high interest rates on things like that with a shorter loan term versus a 1%, spike on a home loan?
I think it's overall just the purchase price amount. It seems less when the price of the item is lower. So it's just more of a sticker shock kind of thing. But I think what you're trying to get to, the point is, if you're going to be paying for something like that or taking on a loan that has debt, interest, whatnot, might as well buy an asset that will appreciate over time. Like that same condo I bought in 99 is now, probably 390, 490. Buy something that's going to appreciate over time versus immediately depreciate after you drive it off the lot.
That's exactly what I was getting at. And also, I have some actual figures. So, if you had a $300,000 mortgage and your interest rate went from 5 to 6%, that is a $200 a month change. So, over the course of a year, the difference in payment is about $2,400. Whereas on a car loan, for example, on a $30,000 car loan, if there was a 1% increase, you're only looking at like a $25 to $35 difference in payment. And people can justify that by having one less cup of coffee. But what they're not thinking about is how all of that eats into your housing allowance. Can you talk a little bit about that?
I mean, just having a bougie, nice car is going to mean you have a not so bougie, nice place.
That is correct. Yeah, like right now, lenders, that is the biggest thing that we're seeing is the amount of credit card debt consumers are carrying and car payments. To have $900 car payments, that is significantly eating into your housing budget. For every $100 you have to pay in debt somewhere, you are losing, I want to say, $60,000 in your purchasing power. Not a lender, double check that, but I think that is the figure. So, as much as you can pay down your debts, not be buying things on credit as you're getting ready to buy a home, the better position you're going to be in.
Yes, you can afford furniture and food.
Exactly. Is there anything else we should touch on? Oh, you had a great point about credit scores. Give them that little tidbit.
Oh, I mean, that's something you should definitely keep an eye on. Like, so how she's saying interest rates are 6.66% as of today on average. We have clients that are getting loans as low as 4.5%. And that's just because they have stellar credit history, credit score, all of that fun stuff. So if you don't know how that works, you know, Credit Karma, any of those places can educate you on what you have to be on the lookout to make sure that your credit score is as high as it can be.
Exactly. And another thing to consider when you are getting ready to purchase a home, shop your lenders. The government wants you to do that. So within a 3 week period of your first application, you can apply to as many mortgage companies as you'd like and provide them with the loan disclosures and basically pit them against each other. That's what we tell our clients to do because every lender is going to have a different product and you may not necessarily fit into the box of a traditional home loan. So shop rates, you might save. We had a client who saved like $7,000 just by shopping lenders, and that's 7,000 less dollars she had to bring to her closing costs. So
Plus, also, all those credit pulls will only count as one during that period of time.
exactly. That's what I meant. So, highly encourage that. And, stay informed about interest rates, keep asking the questions. And, like we said, if there's anything else you want to know about, drop a comment, send us a DM, and we'll see you again soon.
Bye.
Bye.